Trader Todd Horwitz of Average Joe Options joins us now. He has his eyes all over this market. And what do you make of this die-hard rally?
You know, look, the rally's been built on very light volume. It's been very thin. Volatility is totally falling apart here. You know, one thing we know for sure, dull markets have a tendency to go higher because there's always money going in through IRAs and through pension funds, so there's always buyers. So lack of volume and volatility, the market's figured to drift higher, which is exactly what they're doing right now.
The dollar reacted with a rally to the Fed minutes. What other reactions are you watching?
Well, I mean, I think if you take a look at the Fed minutes, I mean, you know, we're seeing stronger bond market, which is bringing down lower yield, which means there's a little flight to safety. We're seeing a stronger dollar, which is another sign of a flight to safety. I think you really have to take a look at this overall picture. There's a lot of money flowing into safer asset classes from somewhere, and I think they're telling you there's a reason to be worried here. And I'm not telling you that they should panic, but there isn't a reason to be worried because you can see the money flow into treasuries and into the U.S. dollar. Those are two signs of fear.
Did the Fed actually make any mention of anything that would change your status, though, here? It sounds like it's going to be a while before we see an interest rate hike.
You know, I think the Fed is totally out of bounds and off balance here, and I think that they're stuck and don't know what they want to do here. But as long as they remain cheap money, I guess the markets will continue to borrow and the big companies will continue to flourish, unlike the small business who can't borrow any money at all. So I think as long as the Fed holds their posture here, the market will probably stay fairly strong.
Thank you.
Thank you.